If you've been trading for a while, there's a frustration you've probably felt, but never fully explained. You understand setups, you can read charts, you know where entry should be and where stop should go. You've watched enough price action to recognize structure, trends, and patterns without needing indicators to tell you what's happening. And yet, when real money is on the line, something changes. Your confidence disappears. Your patience shortens. Decisions that felt obvious in hindsight suddenly feel heavy in real time. And eventually, a quiet question starts following you every time you sit in front of the charts. If I know what to do, why can't I do it consistently? This is the question that marks the beginning of real trading, not because it feels good, but because it forces honesty. Most people enter trading believing that success is hidden inside a strategy. Somewhere out there, they believe, is a system that fits perfectly. A method so clear and precise that once you find it, discipline becomes natural and consistency becomes automatic. This belief doesn't come from ignorance. It comes from how trading is taught. From the very start, everything is framed around tools and techniques, indicators, entries, models, risk-reward ratios, sessions, rules. You're told that if you follow the rules exactly, profits will follow. So naturally, you assume that inconsistency must mean you don't know enough yet. At the beginning, this belief feels reasonable. You are new. You lack experience. Of course, the solution must be more knowledge. So you study. You watch videos. You backtest. You mark up charts. Each new concept feels like progress. Each explanation feels like clarity. You're not chasing money yet. You're chasing understanding. And understanding feels powerful. You start seeing patterns where before you saw chaos, you feel smarter, more confident, more prepared. And for a while, it even works. This is where the illusion forms. The strategy starts producing results, especially in controlled environments. On demo accounts, execution feels easy. Losses don't hurt. Wins feel validating, but not overwhelming. You follow rules naturally because nothing emotional is at stake. Your mind is calm, and a calm mind executes cleanly. It becomes easy to believe that consistency is just a matter of time, that once you go live and apply the same logic, results will scale naturally. This phase feels good. It's motivating. It's hopeful. And it's dangerous. Because real trading doesn't begin until something is at risk. The moment you switch to live trading, the entire experience changes, even though nothing on the chart does. The same setups appear, the same logic applies. But now, there is pressure. Money is no longer theoretical. Each decision carries weight. Each trade feels like a reflection of your competence. Your heart rate changes. Your thoughts accelerate. Simple choices start to feel complicated. You hesitate before entering trades you would have taken instantly on demo. You exit early to protect unrealized profits. You move stops to avoid pain. You hold losing trades longer than planned, hoping they'll come back. And when the trade is over, you're left confused. The most frustrating part is that the strategy still works. You can see it. Price moves exactly as expected, just without you. Or worse, against you because you interfered. This is where doubt begins, but it's usually misdirected. Instead of questioning behavior, most traders question the system. They assume the method must with their personality. And so begins one of the most common cycles in trading. Strategy hopping. Switching strategies feels productive. It feels like learning. It feels like progress. Every new approach comes with renewed hope. Each one explains why the last one failed. Each one promises clarity. And for a short time, results often improve. Not because the strategy is better, but because focus has returned. But eventually, the same problems resurface. Early exits, late entries, overtrading, rule breaking, emotional decisions, different strategy, same behavior. At some point, this pattern becomes impossible to ignore, especially after one specific type of trade, the trade that exposes everything. It's a clean setup, logical entry, proper risk, nothing fancy. You follow your rules. And yet, when the trade is live, you interfere. You close early. You panic. You sabotage the outcome. Later, you watch price hit your original target exactly as planned. That moment hurts more than a loss, because now the strategy didn't fail. You did. This is where the journey shifts. Because now, learning more doesn't feel empowering. It feels painful. You already know what you should do. You recognize your mistakes in real time. You understand probabilities. You understand risk. And yet, under pressure, emotions still hijack execution. This creates internal conflict. You start asking uncomfortable questions. Why can't I trust myself? Why do I keep repeating the same behavior? Why do I fall apart when nothing is wrong? This phase feels like regression, but it isn't. It's awareness arriving before control. Most traders don't realize that this discomfort is actually progress. Instead, they assume something is wrong with them. Some quit here. Others keep searching for answers externally. But the ones who stay long enough eventually confront the belief that's been holding them back the entire time. The idea that consistency will arrive automatically once the right strategy is found. This belief is seductive because it removes responsibility. It suggests that inconsistency is technical, not behavioral. That discipline will appear once conditions are perfect. But trading doesn't work that way. Consistency is not created by better entries. It's created by the ability to act without emotional confirmation, to accept uncertainty without needing control, to sit through boredom without forcing action, to lose without internal damage and win without excitement. These skills don't come from charts. They come from self-regulation. At some point, this truth becomes impossible to ignore. You stop searching for new strategies, not because you found the perfect one, but because you're tired. Tired of starting over. Tired of hoping the next system will fix what you won't face. You review your journal honestly, not to analyze setups, but to analyze yourself, and the pattern becomes clear. Same mistakes, same emotions, same reactions. That's when the realization finally lands. Trading was never about strategy. Strategy was just the mirror. A strategy doesn't make you disciplined. It reveals how undisciplined you are. It doesn't remove fear. It shows you where fear controls your decisions. It doesn't create patience. It exposes impatience. The market doesn't test intelligence. It tests emotional control. 2. Traders can trade the exact same system and get completely different results, not because the system changed, but because the trader did. Most people never fully accept this. They don't fail because they lack knowledge. They fail because they refuse to accept what trading demands. Trading demands that you operate without certainty, that you perform without emotional reinforcement, that you act correctly even when it feels uncomfortable. This is not appealing, so most people avoid it. They keep searching for ways to make trading feel easier instead of becoming capable of handling difficulty. One of the clearest signs of this resistance is position sizing. Trading small feels humiliating to many traders. It feels like going backward, like admitting you're not ready. But trading small is often the moment growth actually begins. Smaller size reduces emotional interference. It allows repetition without damage. It creates space to observe behavior clearly. Most traders try to grow money before growing discipline. The market punishes that relentlessly. Eventually, if you stay long enough, trading becomes boring. You stop watching every candle. You stop forcing trades. You wait. You execute. You log results. You move on. There's no adrenaline, no drama, no emotional highs. This phase doesn't look impressive from the outside, but this is where consistency lives, not in intensity, but in restraint. The traders who survive long enough stop asking how to make more money. They start asking why they react the way they do. They stop trying to feel confident and focus on acting correctly. They accept that discomfort is part of the process. They accept that boredom is a sign of discipline. They stop trying to beat the market and start trying to master themselves. The moment you realize trading was never about strategy doesn't feel like success. It feels like clarity. You understand that the market was never your enemy. The strategy was never the problem. The real work was always internal. And once you accept that, trading stops being a battle. It becomes a mirror, not of the market, but of who you are when nothing is guaranteed. If this resonates with you, it means you're closer than you think, not to profits, but to consistency.